All right. Hello, you trading nerds. Welcome in. I am Sweet Bobby, your guest for the next 15 or 20 minutes as we try to figure out the market. Now, remember what our goal is. And this is really good because someone just found our YouTube channel yesterday and they said, Bobby, I've got the same goal you do. My goal is to extract 20% profit from the markets in a year. That's my goal. Now, y'all, if you're looking for 50% returns, I mean, we possibly could get them if we get into those things, but really on average, what we're trying to do is 20% returns. Now, if we do 20% returns per year, we are on track to be the best money managers on the planet Earth, y'all. Nobody can touch us. We are the stuff. So we got to keep our priorities in mind. I know those of you that are shooting for 70 and 80%, it's just not feasible over a long period of time. Now, if you just buy an NVIDIA and hold, maybe you can do that. But we try to extract profits from the market, and we try to extract about 20% per year. Come here, little dog. Come here, little buddy. Come here, little fella. What's wrong? God love him. Look at him. Is that not the cutest little thing? He's a dorky. This is Coco, the Wonder Dog. He is a Dachshund and a Yorkie put together. I know he's your dog, but he is a cute little thing. All right, let me stop the video here. So you want 1,000%, Matt Jolly Wally? I understand, but 20% will get us there. And you got to understand, y'all, 20% would do a lot of good. Let's say, okay, let's just see here. Okay, let's go to investor.gov. Let's say compound interest. Okay. And let's say that we have a account that's $50,000. Let's see here. Let's do financial tools and calculators, compound interest calculators, right? So let's say we've got a $50,000 account. Hey, turn that down, y'all. And we're not going to put any into it. And let's say what we should do in 10 years, if we could average. Now, I know it's not linear, and we might do 25 one week, and we might, hey, turn that down. Daddy's in a class. I'm fixing to come down there and whoop some ass. All right, and let's say that we could make 20% a year, all right, and compound it annually. Let's calculate what in 10 years, what should our $50,000 be? I mean, this is pretty amazing when you look at it. So in 10 years, that $50,000 should be, y'all ready? $309,000. Okay, well, what if you got 20 years? Let's look at 20 years and see what that should be. 20 years, let's do the calculations there. $1.9 million. That is compounding on top of compounding, y'all. We're just talking 20 years, you'd have, $1.9 million. Isn't that cool? So, yeah, it's really good, and that's what we do. All right. So the market is down 0.33% today. It is waiting. Volatility is kind of mixed where it was at 15. It was yesterday, 15 today. AD is just kind of hanging out in a mid lane, about 57. And we got very low volume. Everybody is waiting on a couple of things to happen. They're waiting on the FOMC minutes and meeting and all of that stuff going on today with the Fed. So they're waiting on that, and they're also waiting on NVIDIA earnings. I've never seen one earnings define what a total market's going to do more than this NVIDIA earnings. So we'll be on the lookout for that, and I think those are going to be after the close today. So that's where that looks stand. So everybody's going to be light until then, but we don't care about the news, right? We just care about what the market's doing. So we're down 0.33%. We're right at the cash open. We're right in the opening 15-minute range. And let's go see what the big green monster looks like. The big green monster looks like this. We are fairly priced. Where are we going? Well, we could go here. We could go here. If we hang out here long enough, the point of control will move here, and that will be much more bearish. So if we fall, you know that we're going to the 49.28. That's where we're going. All right. So we kind of know where we're going. We're either going here, or we're going here, or we may go in between. All right. If it doesn't go up, it's going to go down. But we are fairly priced, y'all. Fairly priced, which leaves a little bit more leaning toward the 49.28 than it does this 5,001. Right. This is a little bit bearish looking now for the next 10 days. I'm not saying it's bearish looking for, months down the road, but for the next 10 days, kind of a bearish looking chart. What does our linear regression look like? Well, let's see. Linear regression looks like this. Now, the good thing is we've had 3 down days in a row. Look at that, 3 down days in a row. It is a good day to sell premium when you've got 3 down days in a row. So we might go down to this area here, the 49, what is that? The 49.37. What did I say? 49.28. Yep, that's where we might go in the next couple of days. And then before we continue the move upward. All right, now let's see how big our account's doing today. So we are at 43,610, 43,610. So let's put that in our pipe and smoke it. 43,610. Fire up the band, Rico. We are up 3.77% on the year. We want to be at 4% by the end of this month, which will get us on track for, well, that's too much. We're overperforming. That would get us on track for what? 4% times 2 months is what, 24%, right? So we are well on track to do our 20% this year. All right. Let's look at our Greeks and ratios, see how our little account is doing. So count here is here. So we are 45, 41, 45 deltas, 41 thetas, 45, 41, 45, 41. And VIX is at 15. And our buying power usage is at 83%, but that's not right because we got to look at our positions. And 28 of that is bill, which means that we have $9,300 in our ES and MES positions. $9,300. Let's see, $9,300. Hey, y'all turn that down. Daddy's in the class, y'all. Wow. So look at there, y'all. We're only using 21%. And again, with the market being down 3 continuous days, it's a great day to sell premium. What I'm going to do is probably increase my risk, and I'm going to take 3 tranches of MES. Now, what I want to make sure is that we haven't had any activity in the last, let's say, 7 days. Have we had any orders fill? So on 2/16, we had an order fill. Wow. Okay. So we bought our loans, and I didn't even know about it. Wow. Look at that, y'all. We bought our loans at $1.60. And then what else do we do? Let's see if we've got any other orders in the last 7 days. Let's see. We filled. That was a 112. And then we did bill. So we actually bought 5 here, which means we need to go out and sell 3 again. Let's see our working orders now. Our working orders are, we've got some, yep. We've got to sell some to get our little thing going, our little, what do you call it? Our little Black Swan hedge, Sweet Bobby hedge. So let's trade that first. Those filled. So we've got 3 straight down days. So it's a great day to sell some premium. What do we want to do? Let's go out to about 90 days or so. There, 86 days. All right. And what we're going to do is we're going to go down to the $3 one. All right. So here it is, $3. And we're going to sell 3 of these. And we're going to try to get 310. And we're going to sell 3, 2, 3. There we go. And see if we can get filled. Okay. Come on, baby. Let's fix him up where he'll get filled. So we'll go down to 305. See if we can get filled there. And we are in, baby. So then what we do is we go to that little thing and we do a closing order on it. So go back to 86. Let's go to our 3, wherever we got them. And let's do a closing order, close position, the full 3. And we want to do that when we can close them at 20 cents. All right. And we want this to be a GTC order. Close. Ta-da! 1, 2, 3. All right. Now, we also want to buy 5 when we can do this for a break even, which will be about that $1.60, $1.55 area. So why don't I do this? Go ahead and do a buy 5, 2, 3, 4, 5. And let's make this at, let's say, $1.55. Just ballparking it. And we're going to do a GTC order to buy those 5. And swing better. There we go. So we got working orders here, working orders here. When this gets filled, we will sell another 3, or we may even go up to 6 at that point. So we'll see. All right, so everything looks really, really good. Everything looks really good. So now let's do our 3 tranches of the micros. So let's go to the micros, and we'll go to 120 days. Look at there, we got 120 days today. Awesome. So we're going to do 3 tranches. So we're going to do about here and here, I guess, for the 3 tranches of the put debit spread. So we'll do 3 of those. And at 950, let's see if we get filled. And we are in, baby. I just put those right where those were, right? And so then we'll go down and do 3 tranches of where we can sell the 5 delta. So you can sell where you've already sold. That's no problem. So there's a 5% probability of being in the money, 6%. Let's go down here and let's sell, what'd I say, 3? So that'd be 6 of those, right? 2, 3, 4, 5, 6. That's 3 tranches. And we're going to bump that up to 1650 and see if we can get filled. And no. So let's go $16. $16. 16 and a quarter, I mean. And we are in. There we go. So we got our orders filled. Everything looks good. Now, let's see what we're using 99% buying power. We've got $2,600 in options power. So I was going to buy some more bill, but we're pretty close, right? I mean, I don't think there's need to buy bill. We're good there. So that's it, y'all. That's how we get our 20% a year. We put in hedges and we keep selling premium. So look what we just did. Now we've gone from 70 to 71. Look at this. We were at 45, 41. Now we've taken that to 70 and 71. Plenty of theta, plenty of delta. And now we're using, we were using 9,300 in buying power. So now we're using, oh, let me show you this too. Anytime that you notice a big drop in buying power, like we went from 13,000 last week to 9,300, that's probably a good indication that some of your GTC orders filled in the Black Swan hedge and you bought options. So we needed to pop that back up to the 13,000. And now our buying power is, well, still 9,300. I bet it hadn't updated. But anyway, that I would assume that has gone up a little bit. All right, 20% a year. That is our goal. Y'all have a good day. I will see y'all tomorrow.